The next uranium bull market is going to make some traders rich. The facts are we've had more than a decade of underinvestment, no new mines have come online since, and we've got the perfect storm of supply and imbalance, which I think is going to see a huge price rise. Now, you've probably been brought up to believe that nuclear is bad, probably because of the risk of nuclear war, Chernobyl.
We were recently stricken by a disaster.
Fukushima. Or because you might grow 3 heads.
Wait a minute.
And politicians have played on those fears because it was an easy vote winner to hate on something already hated, and the benefits wouldn't have come online until they were well out of office. But the reality is that nuclear energy is safe, reliable, and it's the only way that we can plug the gap between the fossil fuels into the renewables era. In this video, we're going to go over the drivers of the uranium price and why the price is going to double over the next few years and how you can profit from that too. So firstly, to understand this next cycle, we need to understand what happened in the last uranium bull market. So the last uranium bull market started in 2006 when there was a rockfall in Cameco's Cigar Lake and it flooded and they had to suspend production. The company thought that closing one of the bulkhead doors would actually stop the flood, but unfortunately this was faulty and the company had no option but to just let the mine completely flood. Now, Cameco at the time, and still is, one of the biggest producers of uranium in the world, and so the news of a delayed shutdown caused a huge supply and imbalance misalign, and prices rose from around $30 to more than $120 per pound, which is like a 400% increase. And because of this, it had huge effects on the entire uranium industry. Companies that were struggling were suddenly hugely cash generative because of the high uranium price. And what this meant was that we had waves of speculative capital being thrown into the sector. People were funding anything to do with uranium, and the price just kept going higher and higher. And just like every craze, it always comes to an end, just like it did with Bitcoin and other cryptos in 2017 and 2020. And the prices of uranium were already coming off, but it wasn't until Fukushima that really put the boot into the last uranium bull market and pretty much killed the sector for more than a complete decade. The Fukushima Daiichi nuclear power plant disaster. There was a 9.1 magnitude earthquake, which was the 4th most powerful earthquake ever at the time, and it happened in the Pacific Ocean around 80 miles east of Fukushima, which caused a huge tsunami. News of this earthquake and the nuclear disaster went around the world, and Japan cancelled its entire nuclear strategy almost overnight. Germany followed not long afterwards, then Switzerland, and then Belgium. Spain banned the construction of nuclear power. Taiwan's president called for a reduction on its reliance. And a year later, all of these countries either had no nuclear power or were vehemently opposed to it. Now, as a result of Fukushima and the global reaction, funding for uranium pretty much evaporated overnight. And because of that, there's been a grand total of 0 new mines that have come online since the last uranium bull market. And it's taken more than a decade to work off this excess supply, but in 2021 we did start to see the beginnings of a new uranium bull market. Sprott Physical Uranium Trust was set up, and this is basically an at-the-market vehicle which gobbles up loose pounds like Pac-Man. Investors will give Sprott Physical Uranium Trust money, and the company then goes and buys that uranium and stores it in places. So it's a bit like running a corner on the uranium market. So why does this matter? Well, the price of uranium actually needs to be well above 60 to bring assets back into production or just to make new projects economically viable. Demand is increasing too, so China's new 5-year plan will increase nuclear energy by 40%, and the grid problems that we've seen in the US, Japan and Europe highlight the fact that we do need a reliable source of energy to get through it, otherwise we're just going to see blackouts. And the beauty of nuclear energy is that it's safe and it's always on, and even Greta Thunberg has spoken positively about uranium. And with the energy price spikes in 2022, it's very clear that we can't just get rid of fossil fuels just yet. So what happens when we've got decreasing supply and increasing demand? Well, it's very simple. In that situation, prices will go up until that supply and demand is rebalanced. And at the moment, there's so much supply that Cameco is actually taking loose pounds of uranium from the spot market to supply to its contractors rather than actually using its own reserves to produce. So this is because it's actually cheaper to buy from the spot market, and by doing so they manage to keep more of their own assets to sell in the future at higher prices. Now, I'll never say anything is guaranteed because it isn't, and if we did have a Chernobyl or a Fukushima or the new power plant in Ukraine, if we did have some sort of nuclear disaster, that would kill this uranium bull market before it's even properly begun. But we do know that prices need to be higher in order to bring about more supply, and if prices don't go higher, well then there'll be no new supply left, and if there's no new supply left, that means there'll be no nuclear energy left, and if there's no nuclear energy left, then the lights will go out and we'll start to see blackouts, because reality is we just don't have enough energy to produce everything that we need. So as loose pounds of uranium become scarce and supply starts to dry up, this is why prices will naturally rise, and why I think it's a big driver of why uranium prices will double in the next few years. So how do you trade this uranium bull market? Well, there are a few ways to play this in London. Probably the cleanest vehicle to play it is London-listed Yellow Cake. Now, this is similar to Sprott Physical Uranium Trust. It's a vehicle that doesn't produce or explore for uranium, so there's no exploration or production risk. Basically, it buys uranium from Kazatomprom at a pre-agreed price, so nobody can front-run the market, and then it stores it in warehouses in Canada and in France. Management here have shown themselves pretty good users of capital, having raised capital when the price was above its NAV or net asset value, and buying back shares when there was a material discount to the net asset value share price. Now, there will always be a cost to store uranium in warehouses, but if, like me, you believe the uranium price will go up, then, as I say, this is the cleanest way to play, and I currently have a holding in Yellow Cake, so I have to disclose that. The second way to play the uranium bull market in London is through Aura Energy. This is an AIM-listed uranium miner with its Tiris asset in Mauritania, which was discovered in 2008. And as the last uranium bull market was coming off the boil at this time, there wasn't any investment, and so it's only until recently that the company has restarted operations into this asset. The company raised 10 million Australian dollars in 2023 to progress this through drilling and trying to find more of the resource and prove it out. And one of the benefits of the Tiris project is that it's shallow mineralization, so there's no crushing or grinding required. It's also got an all-in sustaining cost of $29.81, so this is very attractive compared to the current prices of uranium, which are just under $60. That said, Aura is a pre-producer, so that means it's not actually producing any uranium at the moment. The mine still needs to be fully built out, so there is risk, and so far the company has been reliant on external cash injections through equity placings in order to fund and progress the company and the mine itself. So even though the story may be promising, just be aware of that, because remember, lots of junior mining companies come and list in London, but the reality is very few of them ever actually become producers. And for those who want real upside and also real risk, then Berkeley Energia, listed in London as well with its Salamanca asset in Spain, is an option. Unfortunately, the Board of Nuclear Safety decided not to give this company a permit, which unfortunately for the company means that it can't progress and drill, and a company with a uranium mine that can't actually mine isn't really worth that much. And so even though the company has won hundreds of permits through local and governmental bodies in Spain, without this permit the company can't progress the Salamanca mine into full production. And even though sentiment in Europe for nuclear energy is on the rise, unless this changes, this company is really high risk, and so you need to be aware of that. So hopefully this video has been helpful. Thank you very much for watching, and do let me know what you think in the comments below. But this is why I think uranium is going to be a great asset for the next few years. I could always be wrong, I often am, and this is not investment advice, so please do your own research accordingly. And yes, I would love to hear what you think in the comments below. See you in the next video. Thank you very much for watching.